Gold prices trading near steady this Wednesday. We have Jim Wyckoff up next on Technically Speaking. Thanks for being with us, Jim.
Good morning, Daniela. Good to see you.
Jim, this Wednesday seems the gold market bears remain in near-term technical control as markets in China are closed this Wednesday. As we're talking midweek, what is your sentiment for gold?
Daniela, the gold market is kind of in a pause mode as we speak Wednesday morning. Certainly the closure of the Chinese market had a bit of a calming effect, especially after Tuesday's turmoil and keener risk aversion in the marketplace.
Jim, what do you see in store for gold and silver the rest of the week?
Well, both gold and silver are still in a bearish technical posture. We're just seeing some kind of consolidative price action on Wednesday. You know, I think Friday's price action in the gold and silver markets will be extra important. If we can close both of those markets at or near the weekly high, that's going to be a bullish clue to further suggest near-term market lows are in place. However, if we close the gold and silver markets at or near the weekly lows on Friday, that's going to give the bears some fresh downside technical momentum to suggest a challenge of the recent lows.
Jim, let's talk about emerging market currencies now. In your Wednesday commentary, you bring up the Indian rupee, the Malaysian ringgit, and the Thailand baht, and you indicate how they're all currently under selling pressure. Could this have an impact on gold?
The weaker periphery currencies are an early clue that there's something going on in the marketplace. The traders and investors are getting a little bit more uneasy. We're starting to see some ripples coming out of the European Union again regarding some higher bond yields. In fact, there's higher bond yields worldwide. Both the weaker periphery currencies and the rising bond yields could, in the coming days and weeks, be a bullish input for the precious metals markets, because not only is it indicative of more safe haven demand for assets like gold, but also less deflationary pressures with those rising bond yields. And that's also a bullish underlying factor for raw commodities, including the precious metals.
And if we bring it back home now, Jim, the US dollar index is firmer, however, not weighing on gold.
Right. The dollar index this week has kind of disconnected from the gold and silver markets, but that may be just temporary. I suspect if we see the dollar index embark upon a solid trending price move, it will continue to impact the gold and silver markets on a daily basis.
All right, Jim, it's now time for your Wyckoff market rating system for gold and silver. Which grade are you giving the metals this week? Last week you gave them a 3. Are you sticking to that?
Actually, it's gone down a little bit, Daniela, for both gold and silver. I'm giving both markets a 2.5 rating, which is solidly in the near-term bearish camp. For the August gold futures, we have solid overhead resistance at that $1,400 level. Got solid technical support at the May low of $1,338. For the silver market, we've got strong overhead resistance at $23.29 in July COMEX futures. Solid support at the recent low of 2025.
Jim, that's your lowest rating yet. How low can we go?
Well, Daniela, my bias is still, certainly the gold and silver market are still in bearish territory. It's going to be very, very important for the bulls to hold these recent lows that we've seen in both gold and silver, because if we take out those lows on the downside, those springtime lows, that is going to open the door wide for some fresh downside pressure, and it could be strong.
Jim, that's all the time we have. Thanks for your thoughts.
Can't wait till next time, Daniela. Bye-bye.
And thanks for watching this edition of Technically Speaking. Email us at newsfeedback@kitco.com or follow this conversation on Twitter at Daniela Cambone. Thanks for watching.